Good morning, everyone. Welcome to the TradeStation Getting Started. My name is Jesus Nava. I'm the Director of Client Training and Education for TradeStation Securities. For me, it's always great to be here with all of you to talk a little bit about the TradeStation technology. Today, we're going to highlight OptionStation Pro and how you can build spreads, how you can trade them, some nice tips and tricks that you can use on the OptionStation Pro platform to make your options trading more efficient. So before we get started, the usual disclosures, just keep in mind that every symbol and idea that I talk about is for educational purposes only. These are not recommendations of TradeStation. Also, that active trading is not suitable for everyone. That is risky, especially when you trade options, which carry a higher degree of risk. And also, past historical performance is no guarantee of future results. For additional information on these disclosures, please visit www.tradestation.com/important-information, and you'll find all the links in there. Okay. Well, thank you for taking time out of your schedules to be here today. And let me go ahead and switch over to my TradeStation platform. By the way, the chat is open. You're welcome to submit any questions you may have on the TradeStation technology. The reason we're here is to help you out and make sure that all the technology is comfortable and you focus on what you do best, which is trading the markets. So great. I see a full group of people here, and let's go ahead and get started. TradeStation is a platform where you can trade, stocks, options, and futures. Of course, you can trade options directly on the TradeStation platform. So you don't necessarily have to go to OptionStation Pro in order to trade them. However, OptionStation Pro is a platform that was specifically designed and created to help you trade options on any stock or index. So if you're really serious about, no, let's not say serious, because I know that you're all serious traders. But if you want to take advantage of the more advanced options analytical tools, then OptionStation Pro is the platform you'd want to use. And if you're trading, one call or one put here and there, maybe you can do that on the TradeStation platform. But OptionStation Pro, it's going to make that process so much easier. OptionStation Pro has been fully integrated into the TradeStation desktop. So all I need to do is come here to the menu bar of TradeStation desktop and click on OptionStation Pro. Let me go ahead and open that up. Yes, this to the question right here in the chat, yes, the session's being recorded and it should be available for playback in a day or two. Our recordings have to go through an editing process and they have to go through the compliance process. And once everything is approved, then we make it available on the YouTube channel. First thing that I wanted to point out to is that in OptionStation Pro, you have the underlying asset at the very top. So anytime you want to see what's going on with the underlying, you look up and you can see that I have Apple here in OptionStation Pro. These columns are a little bit too wide. I see the last traded price for Apple, $195.45. We see a bid and an ask. Now, these bid and ask buttons up here are clickable. So if I click on the asking price, OptionStation Pro will assume that I want to buy shares of Apple, and it'll populate the trade bar at the bottom of OptionStation Pro. Now, these are not options on Apple. These are actually shares of stock. You can see that quantity right here is 100. And you can see how the price is $195.48. But yeah, even though I did say at the very beginning that OptionStation Pro was exclusively to trade options, yeah, if you click on the bid or ask of the actual underlying, you can trade the shares of the underlying right here within OptionStation Pro. We have volume for Apple right here, already trading 8.7 million shares. We have the historical volatility. Now, historical volatility, it is calculated based on historical trading days. Of course, you can modify the number of historical days that is being used. I think right now it's using 30. I know that sometimes I change it. I'm not really sure what the default is, but if you want to know how many days are being used for the calculation of historical volatility, all you need to do is come here to the right-hand side to this little gear, And on the common tab, it tells you, well, my historical volatility right now is set to 30, to 60 days. So let's see if we change it to 30, if it changes from 23.92. Go ahead and put it in and click on close. Wasn't a big change, from 23.92, we dropped to 23.23. So volatility hasn't changed much in a span of 60 days compared to 30 days. But yeah, that's the asset panel. And anytime you need to change the symbol, just go up here to the top left. You can click on the little drop down. This drop down will remember the last 10 symbols you used, and it'll, you see how the drop down here is divided in two. So you have the most recent symbols at the top, and then right here at the bottom, you have a chronological, not a chronological, this is more like an alphabetical list of symbols that you can put into OptionStation Pro. These are all optionable symbols, okay? So give it a explore and see all the things that are available for you to trade. Another thing that I wanted to do, the trade bar right here has a little hide button. So if it pops up if it pops up accidentally, you can click on that little button to hide it. And there's 3 or 4 main tabs of OptionStation Pro that we're going to take a look at today. Based on time, we may not be able to show you every single one, but the options tab is where the option chains are. Analysis is where your graphing is, profit and loss, risk profiles. And then we have the manage tab to manage orders and positions. And then we have a search tab that allows you to search for positions based on a particular outlook. If we have some time, we'll take a look at that functionality and show you how it works. Well, let's go here to options. As I said earlier, we have options for Apple. Right here at the very top, you have a drop down for strikes. So if you want to see more strikes than the ones that are currently visible, just select a higher number. So now I'm looking at 20 strikes on each one of the expirations. I wouldn't select all. Some people say, well, I want to see everything. And maybe you do. You want to see all, depending on how wide your spreads are, how out of the money you want to go on these options. But remember to always bring it back to something that is manageable. The reason I say that is because if you set it to all, it's going to load all expirations, all strikes, even though you're not even looking at them. So for example, we're looking here at the options that expired June 21st, but all the other expirations are loaded in the background. They're updating in real time. So yes, if you set it to all, of course, that's going to require your OptionStation Pro to use more of your system resources. And sometimes you want to save those for, highly periods of high activity where the computer is having a hard time, calculating everything. So just a side note. So let me just set it to 20. I have the strikes here for Apple. If I want to choose a different expiration, I just have to click on the little caret here to collapse. Let's suppose that I'm going to look out for the July expirations. Here they are. We have bid and ask information on the call side, which is the left, and the put side, which is the right. Very clearly, I can see the options that are in the money and the ones that are out of the money. The ones that are in the money are shaded in a lighter background. The darker shade of background, those are out of the money options. And somewhere in between is going to be the at the money options. You can see that it coincides exactly with the current trading price of Apple, which is 195.11, is right here in between the 195 and the 200. That's where the separation is. In line with the expiration, you also see remaining days until expiration. So these options that I'm looking at right now, there's 44 days until these options expire. And on the right-hand side, I see implied volatility. So we have average implied volatility. We have, individual implied volatility for each one of the options. But then we have an average implied volatility right here on the subheader where the expiration shows. Based on the average implied volatility, we also have an expected move. What does this mean? It means that Apple, based on the volatility of these options, is expected to move $10 or $11 right now, $11 up or down. Notice that there's a plus and a minus. So volatility just measures, how active the stocks are and how much they are moving but it doesn't really give you direction. So this expected movement is in either direction, $11 up or $11 down. This expected move is also represented in this little shade of gray. So it does give you a visual of where the price is expected to be. Of course, this is helpful in selecting the strikes that have the more probability or the less probability of reaching a certain value, depending on what strategy you're implementing. But at least you have this visual that tells you, okay, Apple is expected to be within this range or this shade of gray for the next 44 days, 44 trading days. So this is before the expiration date. Does that make sense? So if I'm trading, for example, an iron condor, for example, and I want the price to be somewhere static, somewhere in the middle, I can probably, trade strikes that are outside. So one thing that I didn't get to, and I'm just doing it, clicking on the bid and ask is going to automatically select that option for a transaction. Clicking on the bid, it's going to be a short, and clicking on the ask is going to be a long. So you notice that I clicked on the bid price for this 185 and it automatically turned red. Now I'm going to hold down my control key, because holding down the control key allows you to do multiple selections here in OptionStation Pro. And I can click on the 175 and you can see that it gets highlighted in blue. Now I can go outside of this probability of movement and say, okay, I'm going to do my short right here for the 205, and I'm going to do my long here for the 215. Now, of course, I'm holding the control key when I'm clicking on each one of these legs, and I can create this multiple selection, which is an iron condor. You can see that it automatically sends all those 4 legs to the trade bar, thinking that I'm going to trade it. Now, of course, in iron condor, I want the price to be somewhat neutral or within a certain range. I've selected my short options, and the outlook here is for Apple to stay within this range. So based on, and I want to do this exercise because notice that I created this iron condor in relationship to where the price is expected to move. Now we have that expected movement here. On the expiration row, it does give you an indication of where the price are likely going to go. So if I want to make sure that if it does move within that range, that I'm still within profitability. Another thing that I wanted to point out here as well is that on the strike column, you see a visual of where profitability is. You can see these colored lines on either side of the strike column. It tells you that if the strikes go lower than 180, then you're on the negative side. And if they go above 210, then you're on the negative side. So what you want is for the price to remain within the 185 and the 205, where, we already looked at the expected. So I think I jumped a few steps here in OptionStation Pro, but I wanted to show you how you can use that expected move shade in order to select strikes that make a little bit of sense for the strategy that you're implementing. If I wanted to remove this selection, I can, right click and remove the legs, each one of the legs. I can also click on the strike price of either one. And if I click on one, it just sends that over here. So if I right click and remove the leg, then everything's clear. And I still need to click on this little button here to hide the trade bar. Let's see. A couple more things here that I wanted to show you on the option chain. If you click on the drop down here for filter, in addition to having the ability to select the number of strikes you want, for example, we selected 20 when we first started. And what that does is that it gives you 10 strikes above and 10 strikes below. You also have this strike range that allows you to specify more strikes on either side. So if you're favoring one side more than the other, you still have this flexibility of displaying more strikes on one side than the other. Does that make sense? If you select the strikes drop down, it'll just do an even split, half and half. But maybe sometimes you want strikes on one side to be more than the other, and you can play around with that filter up here. Yes, Marcos, I see your question there about the confusion of the price is going down if you point upward and the price is going up if you do downward. This is pretty industry standard. I know that there are some other platforms that allow you to switch the direction of where the strike prices are going. But here on OptionStation Pro, we don't have that capability. The strikes are going to go from lowest to highest, and that's going to go from top to bottom. So the lowest are going to be at the top, and the highest are going to be at the bottom, unfortunately. I wish that we could, sort them differently, but not at this time. So it's one of those things that you'd have to, get used to it and familiar with. Bob is asking, is there a way to set the screen so one can see the equities beta? That's interesting. What you can do is you can do that. I know that is somewhere here. Yes, that's in the analysis tab. You have the beta weighting up here. I don't believe we have any beta weighting here on the option chain. Let me go here to my columns. There's a little gear, not the gear, there's a little wrench here on the top right corner, and I can customize the columns. So yeah, the only place where we show beta, Bob, is in the analysis tab. And we can, do beta weighting on against any, ETF index or any symbol of our preference. We can take a look at that in a little moment. Okay, so let's go back here to options. Let's say that we want to buy a call. This is a call with a strike price of 195. It's being sold at $6.40. So that's about the expected price that I would have to pay in order to own that call. We can see the line right here. As soon as you select an option, we can see the line on the strikes column telling us where profitability is. In fact, that point where the line switches from red to green, that's our break-even point. So you can see that if we buy this call, the price would have to increase to at least, close to $200 in order for us to start making money. And the reason for that is because, yeah, you buy this, but your cost, the $6.30, needs to be added to the strike in order for you to know what your break-even point is. Now, of course, we clicked on here and it opened up the trade bar at the bottom. We can select our price. The natural price, right here, this button here, the 625, is always going to be matching the 625 here for the asking price. If you do a natural selection, yes, you're going to be buying it at the ask, which is the selling price, right? And if you do a mid, $6.20 is going to be a price in between the bid and the ask. Of course, selecting the mid sends the order at a price that is not, part of the inside bid and ask. So your order may just sit there and not get filled at all. But if you want to increase your probabilities of getting filled, or maybe the speed in which you get filled, natural is the current price at which these options are being sold. And if you submit an order to buy it at 620, then you are likely going to get somebody to sell them to you. So now that price is 615. Notice that doesn't automatically change your limit price box. So you have to, can just keep on clicking on natural to update that box. If I place the order and say yes, order filled. I'm not sure if you heard my computer, but I did have an audible confirmation that says order filled. I see a +1 here on the left-hand side. So OptionStation Pro will display that +1, showing you the number of contracts that you're long or short. The +1 means that I'm long one contract. The blue means that I'm long. The fact that is right here means that I'm long one contract on the call side of the strike price of 195. Notice that you also have that +1 showing up here on the main header for the expiration. So if I had this collapsed, looking at all the expirations, I know on which expirations I have options or open positions opened. So that's also a nice feature there. Now, of course, if I wanted to reduce my cost, it did cost me $620 to get into that trade. I could sell, a call and create a vertical spread. If I click on this 221. I could have done it, together. Let me show you how to do it separately, which is maybe not ideal because your intention is to create a spread. You might as well, trade it as a spread from the get-go. But here, let's say, for example, that I think about an example, $625. Let me try to reduce my cost. I'm going to sell a 205. Okay, and let me do a natural pricing on that and place the order. That did not get filled. I did not get an audible confirmation. You see that did not give me a -1 here. So maybe the price changed by the time I submitted my order, so I can manage that order. Let me go here to the Manage tab. My columns here are a little bit squashed, so let me go ahead and open them up a little bit. It's quantity, symbol, expiration. This is limit. This is my filled price. Okay, my account, my order, stop price, if any, duration. Okay, those are all additional characteristics of the order. So let me make sure that I see all of them. Okay, perfect. So this one right here, these are the received orders. You know that in the Manage tab, your orders are going to be grouped by status. So you have the received status, and then you have the filled status. This is the one that we filled earlier. We bought one call, but you can see that our sell to open here is still sitting here as a received order. The reason for that, let me open this up. The reason for that is because we wanted a limit price of 220. You can see how the natural price is 218. So we can change the price. So I can right click on that order and say cancel replace and say, let me sell it at 218 and place the order. That's still not getting filled. Let me do a market order instead. Cancel replace and place. Order filled. Okay, so I do get filled. Now sometimes you'll see that in the trading simulator, which is what I'm connected to right now. These are not real trades. The execution, sometimes it's tricky if I put it that way. Most of these issues do not exist on the real live account. But if you find issues with filling orders on the simulator, sometimes it requires us to maybe contact our technical support team so they can just reset the trading simulator server. But I have my 2 calls filled. Notice that I have a positions panel right here at the bottom, allowing me to open up Apple, and I can see my 2 singles. I see my short at 205, and I see my long at 195. But what I can do now is I can combine those 2 into a spread. So even though I traded them separately, and I pointed out this at the beginning where I bought a call and I sold a call with the intention of, reducing my cost because I'm paying for one and I'm receiving money for the other. But now I can, combine them and trade them as a spread. Combining single legs is very easy at TradeStation, just requires a click and drag. So I can click on that row, doesn't matter which one you select, which one you drop on top of each other. So I'm going to drag the red and drop it on top of the blue. You get a visual indication where the orders are going to be combined by this purple shade. And as soon as I release my mouse button, they are combined. I open it up by clicking on the plus here on the far left, and you can see that this is a vertical spread that's already making about $13 as we speak. Now, of course, it's going in my favor by coincidence because we didn't analyze the markets whatsoever. I didn't have a particular outlook. I just put in a trade and it's making money. It doesn't happen very often, but I'm happy that it's in the green. Now, if I wanted to capture those $15, maybe I say, okay, that'll pay for my coffee at least. You can right click on this position. It makes it very simple for you just to right click on the open position and say, I want to close this position right here. Closing this position brings up the trade bar. And of course, you can specify how is it that you want to close it. I can close it based on the price of the spread. See, right now, the spread is showing me a credit of $4. However, I can also do closing transactions based on the underline. Now let's go ahead and do both. I'm going to do both, and I may have to cancel an order. But let's say, for example, that this is a credit of $4. Let's suppose that we're looking for a credit of $5. We're shooting for a little bit more, right? So let's go ahead and place that order and say yes and yes. So the order goes through. You can see it up here. This is the vertical. It's received. I'm looking for a $5 credit. I know that the current spread price is about $4, but this will wait until there's a credit of $5 for this spread to be exited. Of course, I can do that on the opposite side as well. Let me go ahead and cancel replace. I'm going to cancel replace. Let's suppose that instead of a $5 credit, I'm going to say, well, now I cannot change it. I cannot change the order type. So I can only change it to market order. But let me go ahead and do something here. Let's go ahead and cancel this trade instead. I'm going to right click on that vertical. And instead of just doing cancel replace, I can just click on cancel order. Notice that now it goes into this grouping, you are out. So if I right click on my position again and I say, hey, close this position, I can say, well, if the credit drops to $3, keep an eye because I may want to get out too. I probably paid a little bit more than the $3, so I may not be even breaking even here, but I can say, give me a stop market order. Sorry, I should have done the order type first. Notice that it switches me over to the stop price. And I say, if the credit drops to $3, I want to get out. This will serve as a stop on that spread. They place the order, say yes, and yes. And the order, again, is right here as a received order. Is looking for the credit to drop to $3. Right now, the natural is $3.93. If it drops to $3, then it gets me out again. So yes, those are two ways in which you can manage this vertical, either by shooting for a target, I did say $5, or setting it as a stop. If it drops to $3, then I'm out as well. Can you set both at the same time as an OCO? Unfortunately, no, not on a spread. So if you wanted to do like two scenarios, like have the profit target and the stop loss on this vertical, something we cannot do. But I'll show you a trick because all the options pricings, of course, are going to be based on the price of the underlying. So I can theoretically do a sort of OCO, but instead of basing it on the price of the options, okay, I lost connection to my TradeStation. That's why I didn't cancel the order, but I'm going to try it one more time. Right click on that vertical and then cancel order. There we go. So now I have my two orders that I placed earlier canceled. I'm going to go back here to my Apple vertical. Let's go ahead and right click on that vertical. I'm going to close this position. What I'm going to do now, though, is instead of figuring out the price here, I'm going to set my order type to market. And I'm going to go to activation rule. Then click on the ellipsis, because this is the way that you reference the underline as a way of triggering the exits of your vertical. And I can do two price exits. So if Apple is going up or down, I can trigger those exits. Let me show you. Let me go here to price. I'm going to add AAPL. Let's add it. If Apple trades below 195, if Apple trades below 195, I'm not interested anymore. Okay, this is a bullish spread that I put in, and I want the price of Apple to go up. So I'm going to say this. I'm going to add another condition that says if Apple goes above 200, then let me drop this a little bit more. Let me do 194. So it's not so close to the current trading price. If it goes below 194, I'm not interested. If it goes above 200, then I may want to capture some profits. So this is a way that you set two different behaviors on the exit of your spread. You have to make sure that you specify a time activation, that you use the underlying price, and this is a very important step that you must not forget. Change this operator from and to or. If you leave it on and, it'll never be true, because what you're looking for is for Apple to be less than 194 and more than 200 at the same time. And that is impossible. It's either one or the other. So make sure that you come here and change this operator to or, so that if either one is hit, then I want the action to take. I want the rule to take action, okay? So let me just click OK. And that's it. Once you've set your activation rule, you place the order. And the order is submitted. You can see that the order is received up here. One thing that you can check is the advanced column right here on the very end of my column. Let me just make this a little bit bigger, because this will tell you the condition. C and D for condition is Apple less than 194. STT stands for single trade tick. So as soon as there's a trade that happens at 194, that's what triggers your exit here. And you also have Apple greater than 200, also set to single trade tick. Does that make sense? So yes, I showed you a few ways in which you can manage a position. We can manage a position based on the price of the option itself and set it up as a profit target and a stop loss, not all together, but you can set those orders individually if you want to do that. But you can also manage your vertical and set activation rules based on the underline and say, well, if the underline is doing this, I want to take some action on my spread. That's exactly what we did here. We set up two conditions for Apple. If it's below 194, above 200, I want to exit my spread at market. Does that make sense? Okay. Hold in your account as an options is something that you can graph. So if I go to my analysis tab, my analysis tab will automatically show any positions that are open in my account. So if I click on the plus here, this is the vertical that I just tried. This is my real position that I created. And if I check the box here, there's a little checkbox here next to the spread name. And you'll see that as you trade multiple options, you'll have multiple things here. You have multiple, open positions, multiple simulated positions. They're all going to be listed here, and you have the ability to check the ones that you want to integrate into the graph. I only have one here, so I'm just going to check the box here for vertical, and I see the graph of that vertical here in the analysis tab. So if you're looking for risk-reward profile graphs, then this is the place to be. Let's talk a little bit about graphing and some of the functionality that you have here. I have the ability to click and squeeze the scale. These are the prices of the underlying right here at the bottom. You cannot do that on the P&L though. The P&L pretty much adjusts automatically to maximum loss, maximum profit. You do have two lines in the graph. You have a blue line, which represents the value of the options at expiration. And you have the white line, which is the value of the option right now. The option right now, or the value of the option right now, of course, is going to be different than at expiration, because expiration, or the time before expiration, that time that is available on the options, of course, turns or translates into value. So that value, of course, is reflected here on the graph, and that's why the two lines are different. But it does allow you to create multiple scenarios of what if the underlying were to do this or that, what effect would that have on my options position? By the way, a couple of things. The shade of gray that you see in the background is expected move based on standard deviations. So what you see right now is one standard deviation of the historical volatility. Everybody sees the one over here. This is where you adjust the standard deviations. One standard deviation is about a 68% probability. So what we're saying is that there is a 68% chance that Apple will be within this gray shade. Of course, we can increase the standard deviations up here. And if we turn that to 2, then you can see how the shade gets wider, because now it increases the cone of probability. Now this is a 95% chance that Apple will be within this shaded gray. And it's a big chunk of price, you know, it goes all the way from 175 to 220. So we have a big range of prices based on that historical volatility. If you wanted to, let me bring that back down to 1. If you wanted to know what those specific prices are at 1 standard deviations, you can click on, you can use this section that's called price slices. And if you click on the little drop down for pinned, you're going to find one that says 1 standard deviation last and plus 1 standard deviation. Let me go ahead and click on that option, and you'll notice that it'll add 3 vertical lines to my graph. One right here in the middle at 195.76, which is the current trading price. You see how this line in the middle is going to match the price here for Apple. And then you have the lines on either side, which are going to match the 1 standard deviation. And of course, that's a real-time calculation, and you see the price is shifting left and right, but you can see where the specific price is. So 185.12 to 207.08. Not only that, but it also tells you what the theoretical value or theoretical P&L would be if the price of Apple would be at those levels today. Of course, we're looking at the plot today. So this is looking at now, base to expiration 44. So right now, the price is 195. So you can see that the theoretical P&L is a little bit above break even. It's about $21 in theoretical P&L. Whereas if it goes up to $206 today, a profit of $325. So these are the what if scenarios that I was referring to that you can create here within OptionStation Pro. Now, of course, if I wanted to, I'm not sure what happened here, but I lost my, there we go. I think it was a, my OptionStation Pro just crashed. OptionStation Pro has generated an unhandled exception. Let me see if I'm able to continue without restarting. So the next thing that I'm going to show you is that, yeah, these are all the theoretical P&L based on that white line, which is the value of the option right now. But I can set that to any other plot. Let's say that I click on this plot and I set it to plot number 2, which is expiration. Take a look at the color, it's blue. And inside the square brackets, you see base to expiration 0. So if those prices were maintained at expiration, notice that if Apple doesn't move, if it stays at 195, then you are losing money. You're losing $340. So this is the strategy that the more, you know, Apple goes up, the better it works, you know, in your pocket. Here, if it goes up to 206, then we make the $616. Now the $616, if you look at my position down here, is my maximum profit. So that's the maximum that I can make. It can go up to $300, and this is the maximum that I would make, $616. And the reason for that is because it's a spread, limited profit, limited loss, so it's all measured. But still, you know, it's still a an interesting strategy to apply. And the maximum loss right here, 384, of course, that would be realized if the price went down to a particular level. If you wanted to not wait until expiration, let's say that I'm holding this spread only a couple weeks. Today is today's the 5th of June. Let's say that we want to keep that trade a couple weeks until the 19th of June, which is a Wednesday. How would I calculate what my P&L would be on June? Did I say June 18th? Yeah, 19th. Oh, Juneteenth. Yes, that's the holiday, right? Yes. So how do I calculate that? Well, I have to add another line here. Notice that you have a little drop down up here that allows you to have that extra line. I'm going to have not only expiration, but I also want 2 days. Notice that it adds the green line, and you have the specific date right here on the right-hand side. The white is now, oh, the blue one is July 9th. Okay, I thought that was the June. The blue one is July 19th, where that's when the options expire. And the green one, it sets it to somewhere in between. It sets us to July 9th. But I want that to be June 19th. So how do I set it to June 19th? I have to go here to my gear on the top right corner of OptionStation Pro, go to my graphing, and then I have to play with my sliders here. Notice how the white slider is all the way to the left, meaning that that's now. The green slider is all the way to the, the cyan slider is all the way to the right, meaning that that's expiration. And notice that, the green one, it's somewhere in between, like 2/3 of the way. But I can change that. But I'm going to keep an eye up here because I want to make sure that when I move the green line, it drops right at June 19th. So I'm going to drag it here. Be looking over there on the top left corner, and I'm going to drop it at June 19th. There we go. Drop it right there. It's a significant shift. We're 2/3 of expiration. Now we're about 1/3 of expiration. And you can see that from June 19th, it tells you how many days remain until expiration. Still has 30 days before expiration. I'm going to click on close. Notice that the green line gets a little bit closer to what now is. But now I can switch my calculations here to plot number 3, and I can see the effect on my P&L based on that green line. So if by the next couple weeks, my profit will be $351, not the maximum profit of the spread, but if I want to just capitalize on that small movement and that small period of time, that is something that I can do, and I can have a measured, profitability on this particular trade. There's no rule that says that you have to hold on to your option spreads until you reach maximum profitability. You can manage those positions at any time. And this tool right here allows you to go to a specific date and measure, what that profitability would look like, so that you can maximize the use of capital, maximize the use of your trading. Okay. Anything else? Are there any questions so far? Because I want to make sure that I'm addressing your questions and that everyone here is grasping the concepts. Sometimes they're a little bit complex if you're not really used to a platform like this. So let's go ahead and take a look at some of the questions. Marie says, I usually put in a target and stop the day after I get filled to avoid the pattern day trader rule. Okay. You mean if you get filled on that exit? Because I'm pretty sure you can submit multiple orders. What you don't want to happen is for that stop to get hit on the same day, or the target to be hit on the same day, because it counts as a day trade. But if you are submitting your stops and targets and you don't get executed today, that would not be considered a day trade. I see the point, Maurice. Yes. So the way that it's being used here, yes, to not have the risk of a trade being counted as a day trade, then your choice is to put in those trades the day after. Okay, I see the point. Okay. Although, sometimes when I think about protective stops, if you don't have a protective stop and you would want to have one, even for extreme cases, of course, it's likely for a stop or a target to be executed if they're really close to where the trading activity is. But if we set those really far apart, then the risks are less. I would wonder if we in your case, Maurice, if you want to do something like very extreme, but at least have some protection today of trade in case something extreme happens. Okay. Excellent. So Maurice is also using activation conditional orders to exit. Perfect. Great. So yes, one thing that I wanted to show you too is the ability for you to trade from here. I can right click from the analysis tab and I can close. I can analyze a duplicate. I can do many things that, just I want you guys to explore the right click menu and see all the things you can do. And I always recommend everyone to use the trading simulator so that you're not risking your capital at any moment, okay? The 2D, Fernando, the 2D symbol is just a different visual of this graph. As you can see, this is a two-dimensional graph where you see the lines flat against the background. But there is a time component that is not visible here. So you have the underlying price at the bottom, you have P&L on the left, but there's a component of time. You have time, which is right now, and as it approaches expiration, you get further from now. So that dimension is added by just going here to this drop down and setting it as a 3D graph. This shifts everything and allows you to see, here you see, is the same graph. You see underlying price right here at the bottom. You see P&L here on the left-hand side, but then it adds this dimension of time where you have now right here at the back, and then right here in the front is expiration. And you can see how the profitability gets affected as expiration gets closer. So you can turn this 3D graph in any direction and see how it holds. I like to see this, makes a bigger impact when you're looking at iron condors or butterflies. Let me show you what I mean by that. Let me go back here to my options. Let me switch my symbol here to something else. Let me go to SPY. Let me create a quick iron condor. And let me go ahead and analyze this. So I'm going to analyze this, but I'm also going to, okay, here it is. So in an iron condor, of course, this is now right here. So there's a slim chance of probability. If we set it to 2D, you can see it very clearly. You can see that now, and 2 weeks from now, the profitability is very close to break even, very little. It's not until you actually get closer to expiration when you have a bigger chance of making more money. And that's very visible here as well on the 3D graph. On the 3D, you can see that our profitability right now, it's kind of flat. But as you move this around, and as the position approaches expiration, you can see how there's a dramatic increase in the profitability opportunities. So that's something that you can see here on the 3D graph. All right. Well, guys, thank you so much for joining me today. I appreciate the time you spent here with me. Check out the events calendar for all the upcoming topics. We have masterclass on Tuesdays, and we have getting started on Wednesday. All the sessions are recorded and are available on the TradeStation YouTube channel. And it's always a pleasure to be here with all of you. Have a wonderful afternoon, and I'll see you next time. Great having you. Bye-bye.